UK house prices rise by thousands according to Rightmove. Now I bet that's a headline that you didn't think you'd see, especially when it's plastered all over the press around a UK property market crash which could be in excess of 10% or more during 2023. So let's dig into the current state of the UK property market. We'll take a look at what some of the analysts are saying and the experts are saying, along with looking at the likelihood of what a full-blown UK property market crash is throughout the course of this year. So first up, let's talk about house price trends. Now, according to the Halifax House Price Index, which was released just this month, the average house price fell by 1.5% during the month of December, leading to our fourth consecutive month of house price declines. In numerical terms, that's taken us from peak market values of £293,922 down to now having an average house price of just £281,272 as of December last year. That's a total decline of £12,650, which is the equivalent to about 4.3%. Now, if our market forecasters stand to be correct, well, we're potentially looking at an additional 10% market decline during 2023 on top of the 4.3% decline that we've already seen. And if that were to be the case, then that would take average house prices down to £253,144. That puts us in the ballpark of the equivalent market crash that we saw post-financial crisis, right that we're back in 2008. Perhaps not quite as bad from a percentage point of view, but certainly a sizable decline from all-time highs. Now, whilst on the surface that all sounds quite bad, actually we're only coming back down to market prices during the pandemic of around March 2021. And that's largely due to the fact that house prices were inflated so much over the course of the past 18 months. So if anything, I think it probably just is a healthy market correction, which is actually just a reflection of the current economic conditions that we're facing into, with rising levels of inflation, higher interest rates too, and just a cost of living crisis more generally. And all of that information about a potential stock market decline probably doesn't come as any surprise to you. But what certainly does surprise me, and one of the core reasons why I created this video, is when I saw the headline that house prices were actually on the rise during January of this year. Because you don't really associate rising house prices with a full-blown property market crash. But as with all of these types of headlines, when you actually dig into the detail, the story becomes a little bit different. Instead, the truth is that actually average asking prices are about 1% higher now than what they were in December, up from £359,137 to now £362,438. So let's dive into a little bit more of the detail as to why asking prices are slightly higher during January, when in actual fact I think everyone's probably expectation was that house prices would fall, especially into January and throughout the rest of the year too. So let's dive into part 2 of this video, which is expert analysis. Now, giving my opinion to begin with, and I'm by no means an expert, I think there are a couple of different ways to actually look at this. Firstly, asking prices don't reflect sold prices. So just because people have actually listed their houses for more in January than they did in December, it doesn't actually mean that they'll actually achieve that price. But then on the flip side, and on a more positive note, it also does suggest that sellers are actually prepared to test the market, which of course is certainly a positive, because one of the biggest issues that we face into in the UK property market, and it depends kind of which side of the fence that you sit on. If you're a first-time buyer, it's certainly less favourable, but if you're an existing homeowner, then it's probably more favourable. But it's actually the lack of property supply. The truth is that home buyer demand actually outstrips property supply here in the UK. And as a result of this, it's actually one of the main reasons why UK property actually makes for such a good investment, because historically speaking, property prices have risen at a pretty steady rate over the course of many decades. Now, if the cost of living crisis, rising interest rates, and persistently high levels of inflation, it is, in my opinion anyway, that a lot of people will stay put during this time, and that's certainly understandable. Let's be honest, a house move is certainly stressful enough, let alone with the additional financial burden that we're presented with in today's current market conditions. Now, if my opinion were to be correct, that would result in a pretty bad outcome for the state of the property market. It'd result in home buyer demand falling massively due to a lack of appetite for people to actually purchase homes, which as a result would pretty much grind everything to a halt. And going back to my economics days, that's how markets work. If you reduce demand and supply remains constant, while prices inevitably fall. Home buyer demand is actually up 4% compared to the same period pre-pandemic, but it is still down about 36% compared to this time last year, where we had one of the busiest ever starts to the year. Perhaps a slight increase in demand is down to seasonal changes coming into the new year, or perhaps it's due to lower mortgage rates, which are now down just below 5%, which perhaps is whetting people's appetites. Whatever the rationale is, there certainly appears on the surface of things to be a little bit of optimism creeping into the market, and some estate agent views that have been published on Rightmove certainly back this up. One of them says premium property prices seen over the last 18 months have largely disappeared, which in turn has encouraged buyers back into the market, and sales inquiries are actually on the rise. The initial shock to the housing market last autumn after the mini budget has also subsided. Now, I don't completely agree that house price premiums have completely disappeared. Yes, we're down about 4.5% from all-time highs, but I don't necessarily think that means that the whole premium has actually disappeared altogether. Nonetheless, another agent goes on to say, along with increases in viewing levels seen so far in 2023, we're also receiving more requests for valuations. This bodes well for a reasonably balanced market in months ahead, where supply and demand are more evenly matched. And I think this is certainly a very key point here. If we have supply and demand more evenly matched, at some level of market equilibrium, it should support a stable property market with more stable pricing too. But be sure to let me know what your thoughts are down in the comment section below. Now let's move on to part 3 and talk about the likelihood of a further crash. I think it probably goes without saying some of the best placed companies to comment on market analysis here in the UK is of course the UK banks. After all, it's their job to lend out billions and billions of pounds every single year. So because of that, they're going to be well in tune to market data and market analysis to, of course, ensure that they're actually not lending out at ridiculous property valuations. So Halifax, one of the largest mortgage lenders, is actually forecasting an 8% decline in property prices throughout 2023, which is kind of in line with the forecast that I presented a little bit earlier on. However, they have actually caveated this with the forecast uncertainty remains high, given the current economic environment. And I think that's certainly a fair point and certainly a fair caveat, because truth be told, you can look at all of the market analysis and all of the market trends available to humanity, but actually nobody can truly predict with any high degree of accuracy the total decline of the UK property market throughout this year, or even if it will end up in a net market decline by December 2023. The market is based on the sentiment between buyers and sellers, and a complete ton of other variables completely not within our control, which makes everything so much more harder to predict. And I think whilst probably most of us agree that property prices should fall from a kind of logical standpoint throughout the course of this year, because let's be honest, the UK economy, UK markets just in general are still very fragile. On the flip side, actually beyond 2023, property prices are expected to rise once again, which I guess is probably the overriding point to focus on, especially if you're worried about a short-term market crash. And that's that it doesn't matter what market we're talking about, whether it's the stock market, the property market, or commodity markets more broadly. Prices fluctuate during different market cycles. And during those fluctuations, of course, there are always winners and there are always losers. But if you hold on to UK property for long enough, historical averages tell us that the average rate of return for a UK property is roughly about 5% per year. So don't be too disheartened if property prices do come down throughout the course of 2023. However, for those of you who are first-time buyers, now is not the time to be disheartened. In actual fact, now it becomes a great opportunity for all of the first-time buyers out there to actually potentially get on the property ladder. The reason being, it's more difficult now, more than it ever has been before throughout the course of history, to actually buy your first home. For context, average house price to income ratios have actually peaked at about 7 times income, which is simply insane given that lenders will typically only lend out about 4.5 times your salary. But now with house prices forecasted to come down somewhat, then hopefully those house price premiums will also start to come down too relative to your income. And due to that, it certainly could make house prices slightly more affordable for your average first-time buyer. So I think if you are looking to get on the property market during 2023, I think this is a great opportunity for you. But even if you're an existing homeowner, whilst it might put you off from selling your property because you're going to get less money perhaps than what you thought you were going to achieve, actually it's all kind of relative, because the house that you're potentially going to look to buy will also be valued slightly lower too. So taking a slightly positive angle from what I guess you could say appears to be very doom and gloom headlines all over the press, if you think about it in the right context, then actually everybody wins. But be sure to let me know what your thoughts are on the UK property market and the state of it down in the comment section below. And if you did enjoy this video, guys, be sure to drop a like on it, subscribe to the channel as well if you're new around here, and with that being said, see you over in the next one.